Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, it is the week before Carnival, but business continues as usual. And today we are taking a look at the first quarter results of Massy Holdings as well as Agostini Limited. Now, both companies would have reported, and in the case of Massy, there was a nice increase, and Agostini remained fairly stable. Let's take a look at those results. And for that first quarter ended December 2020, the first fiscal quarter for Massy, the group reported an earnings per share figure of $1.57, which was a 14.6% improvement from the $1.37 recorded in the prior comparable period. Now, as has been the trend in recent times for Massy, revenues were up just around 1.6% from $3.2 billion to $3.26 or $3.27 odd billion. Operating profits, however, did increase from some 12.6% from $197 odd million to $222 million. That was offset to some extent by share of results from associates and joint ventures, which was down just around 18% from 33.7 to just around 27.6 million. Overall profit before taxes did increase 8.1% from 230 to just around $250 odd million, and profit attributable to shareholders increased by a greater percentage or greater proportion from 15.1% rather, from 133 to just about $154 million. Now, when we take a look at the profit before taxes by segment, some nice trends generally. Improving performance across all segments with the exception of one, which is strategic and other investments. There was a nice 15% increase in motors and machines from 37 to 43 million. Integrated retail also increased just around 4% from 103 to 107 million. And Massy gas products did increase, that particular segment increased just over 20% from 54 to 68 million. That decline in strategic and other investments came about because of certain divestments which would have occurred in the prior fiscal period. So therefore, those earnings associated with those divested companies or businesses would no longer be recurring for Massy. Now, in terms of geographical composition of profit before taxes, some changes, just one or two, but most notably Trinidad and Tobago in red. In the first quarter of 2019 was just around 45% of profit before tax, and in 2020 that increased to just around 48%. Barbados would have declined from an 18% contribution to just around 15%, and Colombia actually doubled from 4% to 8%. Otherwise, it's as you were, and at a price of $62.07, Massy is trading at a price-to-earnings multiple of just around 10.4 times, which is notably below the sector average of 14.3 times, so offering some value there for investors, with a dividend yield of 3.7%, which is substantially above that sector average of 2.9%. So on the basis of attractive valuations, its continuing expansion initiatives into other operating jurisdictions, in particular higher growth jurisdictions, the operationalization of CGCL, which we expect to happen in 2020, and improving efficiency through increased margins, Bourse maintains its buy rating on Massy. Turning quickly to Agostini Limited, or AGL, for that first quarter 2020, Agostini reported an earnings per share of 58 cents, which was in line with its prior comparable result of 58 cents as well, so no change there to the earnings per share. Revenues were up just around 5.8% from 923 to 977 odd million, and operating profits were also up from 84.5 to 92.5 million, a 9.5% increase. However, finance costs did increase by about 40 odd percent from 6.7 to 9.6 million, and there was an increase in taxation also, just around 29% from 16.1 to 20.7 million, with the result being that profits attributable to shareholders did decrease marginally, just around 1.5%, from 40.4 to just around 39.8 million. In terms of profit before tax trends for Agostini, well, no major surprises. There continues to be a fairly stable upward trend despite some of the challenges faced by the company. And we can see that fast-moving consumer goods in that orange color did increase just around 5.8%, followed by pharma and personal care goods, or personal care distribution rather, which was up in double digits, over 20% in fact, from 27 to 33 million. There was some decline in industrial and construction and holdings from 4.7 to 3.6 million. However, that's a fairly small segment for the company. Now, notably for shareholders of Agostini, there has been a welcome trend of increasing dividends recently. After paying just around 56 cents per share in the fiscal 2016 and 2017, fiscal 2018 was greeted by an increase of dividends paid to 61 cents and most recently concluded 79 cents in fiscal 2019. So we see that payout ratio, dividend payout ratio, has trended up from just around 36 or 37% to now the most recent figure of just around 45%. So at a price of $24.45, Agostini is trading at a price to earnings multiple of just around 14.5 times, which is below the sector average of 19.6 times, and does offer a dividend yield of 3.1%, slightly above the sector average of 2.9%. So on the basis of relatively attractive valuations, tempered to some degree by muted growth, but we are cognizant rather of their growth initiatives into the Guyana space. Bourse maintains its neutral rating on Agostini. That is for this week's edition. For more information, give us a call at 2-BOURSE or 226-8773. Email us at invest@boursefinancial.com, or you can check out our website at bourseinvestment.com. And however you choose to spend your carnival weekend, please ensure that you do have a safe and enjoyable one. That's it for this week's edition. See you next week on the Bourse Report.